Well, good Wednesday morning, everyone. Welcome to Payne's Education. This is the beginner intermediate class. My name's Gary Edmonds. I have been the host and instructor for this series of classes for this quarter, started back in October, and here we are now into the first full week of December. So good to be with all of you here this morning as we talk fun stuff, right? It's all about the market, all about helping you get feeling comfortable with what you are trying to do and formulate your plans, your rules, and things to help you to trade and invest confidently for basically the rest of your life. We want you doing this your whole life here. So, but before we do jump in and start talking about the things that we'll be going over today, let's go through our disclosures, folks. Remember that this presentation is for educational and informational purposes only. All investments involve risk, and past performance of anything in the market does not guarantee future results. Unstoppable Prosperity and Charles Payne are not giving investment, tax, legal, or other professional advice. Nobody associated with Payne's education or licensed, so we cannot and do not give recommendations to buy or sell anything. If you see something you like in one of our classes, please make sure you do your own research and analysis on it to see how it fits your investing strategies. Unstoppable Prosperity retains all titles, interests, and intellectual property rights of the material provided and may not be used without express written consent. The terms Unstoppable Prosperity, Payne's Education, Wall Street Strategies, and other marks and logos displayed on its websites and other communications may not be used without express written consent. Charles Payne's experiences are not typical. His results are not a guarantee of your success. Unstoppable Prosperity is not endorsed by or affiliated with Fox Business. Making Money with Charles Payne is the property of Fox News Network, LLC. All right, so with that said, again, a little bio on me. I'm not going to get into that, though. If you want to go back and look at it on the recording, I'll let you do that. All right, so we are following up today with what we went over last week, was kind of a part one, part two type of a thing. So we were going over swing trading, okay? And for those of you who remember what we did and what we talked about last week, we'll get a little bit more in depth into it. We'll start to play some more trades and look for opportunities to go ahead and get this concept down really good, because it is a good portion, or it's a good part of your portfolio that you should be having, right? Not that you're going to be focusing everything on swing trading, but you do certainly want to kind of diversify and have a little bit of flexibility in your accounts. So if you were not with us last week, you can certainly go back and watch the class. In fact, before I do that, I'll just go ahead and pull up our Payne's Education site. Okay, quick links. If you hover over that, we get into the stock investing live classes, the beginner intermediate class. If you wanted to review what we talked about last week, you can just scroll down here, and we have it in the archives. You can just go ahead and watch and see what we talked about at that point in time, just to get you caught up. If you did attend it and you wanted to go back and review it, absolutely go ahead. It won't hurt you in that situation. So we're going to follow up on our swing trading. Again, we'll talk about setups and entry signals. We'll talk about, again, looking for those breakouts, or those bounces. We'll talk about using our exits, finding our targets and our stops. And then we'll go ahead and get a little bit more into monitoring the trades and what we're looking for, how we're going to do it, and what might be a good course of action while you're in the trade. So just again, a little bit more of a just a real quick review. This is a real brief. We'll talk about this, and then we'll get into the meat of everything. So again, the weighted combinations, right? When we talk about trading, which swing is, it's a trading. It's not a buy and hold or investing type of a strategy. Again, we're focusing a lot more on the technical analysis. And you know me, if you've been with me before for a while, I kind of lump the behavioral into the technical, because part of the behavioral, we're looking at the market. How is the market reacting to that particular stock at that time, right? What are they doing? And so the chart, that's how we gain the insight of the market's behavior, the trader's behavior, and that's all part of the technical analysis. Now, I also may not be that heavy on the fundamentals, or even if I look at them at all when I'm doing this short-term swing type of a trade. So again, folks, when we are doing shorter term, fundamentals isn't going to really have an opportunity or chance to affect the trade because we're trying to take advantage of the momentum and what's pushing it at that point in time. So we'll just kind of keep that in mind. So again, your breakdown, right? We have the investing, the buy and hold. This is a longer term time frame, more than 3 months, hopefully years that we'll be in these positions, right? And hopefully we have core positions that we're just in, that things are doing well for us overall. So it is a very long-term time frame, and we're looking to do about 60% of our portfolio into this. Okay. Now we have trading, which we're talk about swing, and this is a shorter time frame. This could be anywhere from a couple of days to weeks, right? 4 weeks, 6 weeks, maybe even 8 weeks. But we don't want to get too crazy in trying to pick a target that might be a little bit unattainable in a short period of time. Okay, so when we do a swing trade, we have to go into this with the mindset that this is a short-term trade. If I hit my targets, I will get out of it because that's what I was happy with when I got into the trade. Okay, so we want to be very, very careful of changing our rules mid-trade. So if you got into the trade based off of one set of rules, we're going to get out of the trade with the same set of rules. Okay. As we talked about last week, right? You dance with who brought you, type of a thing. So also, we're going to be looking at this about 30% of our portfolio. Then we have the kind of the fun ones, right? The speculation, the home runs. These are the ones that we're just doing that really doesn't meet our criteria. Something that we probably would never even think about doing, on the surface, because it's just, hey, we heard about it, or this sounds interesting, type of a thing. And this is the small part of our portfolio. There's nothing wrong with speculation. There's nothing wrong with trying to swing for the fences, but you don't want to have a big portion of your account in there. I love to speculate. I do this quite a bit in my account, right? But I'm still only using a small portion of the account in there. All right. With all of that said, then what does this mean with a swing trade is that we need to get very comfortable in reading charts, technical analysis. Now, I did go ahead and, we talk technical analysis pretty much every single class, every single day, with whether it's in these types of classes or the Q&A classes. We're always talking about charts. And so hopefully you're getting more and more comfortable. If you're brand new to it, don't worry. It can seem overwhelming, but you will get more and more comfortable with it. So the very first thing, the most important thing, is we talk about trends, right? We're needing to identify the trends. Uptrends, higher highs, higher lows; downtrends, lower highs, lower lows. Now, with this, especially in the mindset of swing trading, well, with all trading, basically, we want to trade in the direction of the trend, right? And so if we're doing bullish trades, I mean, why not look for stocks that are bullish? Why would we want to try to do a bullish trade on a stock that's downtrending? Okay, so we really want to make sure we're focusing on the trend. We're trying to ride the tide, so to speak. That's kind of that rhymes, doesn't it? So hey, there's a new market saying ride the tide. I don't know if I've ever heard that before, but there we go. Ride the tide. Okay. So looking for those at least those higher highs and higher lows, whatever it might be that you feel comfortable to identify that trend, go ahead and do that. The next thing we look for, support and resistance levels, right? Those floors and those ceilings, those barriers. Also remember, old resistance, if it breaks above it, becomes new support for the stock, and old support, if it breaks below it, becomes new resistance. And we look for volume. If you're into candlestick patterns and price patterns, especially the price patterns, can be very, very helpful for you in these short-term trades, to help you identify a target. Okay. And then the other thing that you could do on your charts is use indicators. I don't really use technical indicators, meaning like a MACD or an RSI or stochastics or whatever else that you might be using on short-term trades to wait for a quote unquote signal, because again, if you wait too long, you might just wait yourself right out of the entry and out of the trade. Because it's very, very important for us to remember, folks, that we are trying to get a 2-to-1 reward to risk in these short-term trades. And if we are falling lower than that, then we're really going into the situation where that particular type of strategy, this particular trade, may not work for us as well. So we do want to make sure that we're getting that 2-to-1 more closer to those entries. And so sometimes we're waiting for a technical indicator to quote unquote do what we want it to do. It could get us out of that trade. Now, one of the things, or keep us from getting into that trade, one of the things that we always talk about, right? And we talked about this last week, price is king, folks. It's swing trading. This is so important. This is why we need to get comfortable with reading the charts. What is that stock doing? What are the traders doing? Where's that support and resistance? Where's the price in relation to that support and resistance? Okay. Now, again, swing trading. David, you got that right. Price is king. Okay, 70% technical analysis. I like to maybe bump that up a little bit more. And we're looking for an entry with a break above resistance with higher than average volume, okay, or a bounce up off support. Okay. Now, again, if you like to use the two targets, I know Charles talks about a T1 and a T2. Okay. So T2, I call it the full target if you're using that. So the full target will be something that you've identified based off of either a support to resistance move, a price pattern that you see on the stock, and you're trying to get a price target based off of that. So usually this is when we're doing this T2 or what I call the full target. This is what we're trying to get that 2-to-1 reward to risk, okay, on here. I'll just go R and R, reward to risk. Now, if you are wanting to do a kind of a T1 and a T2, the T1 target is kind of that first target. Now, if you wanted to try to do that maybe as a 1-to-1, meaning for every dollar that you're risking, you make $1 on it and then you sell part of the position and let the rest run to your T2, you can certainly do that. So that's kind of the thing we're looking at. Now, again, if you want to do it that way, you certainly can. If you don't want to do the two different targets, you don't need to. I generally like to just shoot for the full target on my swing trades. That's just me, though. That's how I like to do it. You come up with the rules that you feel more comfortable with, and so you get more, which is reaching or using your risk criteria, what you're comfortable in that situation. Now, if as I mentioned, that T1 target, your stop and your target should be equal distance, meaning 1-to-1. If you can get it a little bit more than that, that's fantastic. But again, this is something that we have to look at the chart to get comfortable with. Okay. We have to get comfortable with looking at the charts to be able to see if these targets are really attainable based off of the technical analysis that we're looking at. Okay. Now, if you are doing the two targets, T1, T2, something to think about is after it hits your T1, close half the position or ever have a third of the position or however much that you were planning on closing out, then if your stop should be raised to a break-even point or higher. Okay. Stop should be raised to a break-even point or higher. Now, with that said, let's jump in. And I'm going to bring up the Thinkorswim Paper Money platform here, folks. Now, again, Paper Money, we use this in our class. The Thinkorswim Paper Money, we do it to be consistent with our classes and our views and how we present to you. You don't need to use Thinkorswim or Charles Schwab or anybody with your real accounts, your live trading. You can use whomever you want, but we do use the Thinkorswim Paper Money platform. So I'm going to jump into the monitor tab here, and we'll kind of go and look at our positions. Now, folks, do you remember what we got into last week? Do you remember we did some trades last week? So if you don't remember, then we can pull it up on the platform and take a peek at it. Okay. So yeah, I'm just getting my account started back up again after my conversion over to Schwab, and I'm completely wiping out my paper trading account because I was using a different paper trading account off of a different account in Thinkorswim. So yeah, that's my dilemma here. But if you want to see what we traded, can't quite remember, okay, I'm going to come up to the top here and go to account statement right there. Okay, we're still on the monitor tab, account statement, boom. Now, I'm going to go ahead and right here, it says 1 day back from today. If I click on that, then they have some preset, well, 1 day, 7 days, 30 days, or you can type whatever number you're in there. I'm just going to type 10 and hit enter, okay? And I'll click off of that and bring it up. So now we're going to go to the trade history right here. Says since the last 10 days, I've had 8 orders and 8 of them have filled. So let's see what we got going on here. So it looks like during this class, we did 2 trades. Okay, one on Brinker and one on TXN. Is that starting to ring a bell for anybody here? What we did in the class, and it gives us the number of shares for each of those, and then also our price that we entered into those. Okay, so with that said, now let's go back to our activity and positions here. And so it was these 2 trades right here, Brinker EAT and Texas Instruments TNI. Okay, so something happened here on EAT today. What happened? I don't have any shares. It says 0. What do you think may have happened here? Showing 0. We got into this trade last week. It's okay. It sold. Did it hit my stop? Did I get hits? Did it hit my stop? I hope not. I hope it hit my target, but might have hit my stop. Let's go up into our orders. We got 2 filled orders today. So, and 1 canceled order. What did I get filled today? There we go. So we had an order. It closed 139 shares at $39. And what does it say right here? It hit the order type was a limit. So if it's a sell limit, did it hit our profit target or did it hit our loss? Well, if it hit our loss, it would say stop, right? So hit our profit target. So did this trade work as we wanted it to work? It did, didn't we? Well, let's just kind of go to cancel orders. We'll pop that up, and oh yeah, there it goes. It canceled out our stop because we did it as an OCO. So it got canceled. So we do not have a sell order hanging out there in our account to possibly get hit and filled, and now we're short 139 shares. So that's what the OCO, one canceled or other order, allowed us to do. Okay, so if we go now, and I'll bring it up on the screen. There we go. Now it got filled early, opened up, ran up quite a bit, and it pulled back, didn't it? Right now, trading below our target, but we hit our target. The trade did what we wanted it to do. So we made money. Hey, anytime we make money, we'll be happy with it. But guess what? If we lose money and we lost it and we still followed our rules, we'll happy with the trade as well. Okay, so cool. That one's all said and done. What was the other one we did? Texas Instruments, TXN. Whoops, wrong thing. Let me try this. Right there. So we have 32 shares of this. Still have it in our account. Let's see what's happening with it on the chart. Okay. Well, actually, before we do that, I'll do this. Let's go up to our working orders and we'll take a peek at it. Or you can just click on a little button right there and it'll bring it up. But this gives you a little bit more information, or maybe a little bit easier to talk about. So here's our bracket order. Again, it has this little bracket on it saying these two orders are linked together. So we have our two sell orders. We have our top one right here. Sell at a limit of $163. That's our profit target. And we have our stop at $149.45. We have a current price on the stock of $158.60. So it is creeping closer to our profit than it is to our stop. Okay, so let's see what this looks like on the chart. I'm going to go ahead and bring it up. And here we go. So now, since I have the orders selected to show up on my chart, that's why we're seeing these two things showing up. This is our stop right here, and this is our target right here. Okay. Now, going to zoom in a little bit closer. And we also have the little bracket over here that we can show that these two are linked together. So the OCO, one cancels the other. So if we're looking at this right now, what did we get into that? What was the date? The 29th. This day right here, because we got in off of a bounce, a hold. So folks, looking at this, and we're going to analyze and manage this trade. Anything for us to do? Now remember, we got into this trade as a full target trade. We didn't put anything in that says we're going to sell half at T1 and then a T2. This is a full trade. Now, some of you saying raise the stop. Okay. Steve, is that praying? Or are you clapping? No, we're not praying. It's still doing what we wanted to do. Okay. Now, Zach, you know what? You bring something up here. So Zach said, check to see if you have 50% of your profit and 50% of the projected time. That is a really, really good rule, but that's a rule that we use in option trading. So, and the reason we have that in option trading instead of stock trading is because options go away, they expire, they disappear, where a stock doesn't. Well, I guess a stock can disappear, they go out of business, and that would really suck for everybody. But that rule is geared towards option trading and not stock trading, because we have a little bit more flexibility with time with the stock trade. Okay, but I love how you're remembering that rule with the options on here. So we wouldn't be doing that here. Now, for those of you who talked about putting in a stop, okay, and you don't, because remember when we talked about the T1, T2, right? Let me bring back up our slides here, right? Our T1, T2. So after closing half the position, stop should be raised to break even point or higher. So after closing half the position or whatever it is that you decided to close, then the stop should be raised to break even point or higher. All right. Now, does that sound like a good strategy if we're not doing a T1, T2, and we're just doing a full target? I want you to think about this for a second, or maybe 2 or 3, however long it's going to take you to think about this. Would this be a good strategy to use if you're just doing a T2 or a full target and not closing off half the positions? And if you say yes, it is, why? And if you say no, it isn't, why? Okay, Scott says then break even equals entry point. Steve says that helps protect you against loss. Okay. So I take it, Steve, that means it's a yes. You're a yes on this one. Okay. Keep to your rules for the trade, James. Okay. So sure, but could we put this in a rule for just a full target trade? John says no, because you can protect against any loss with an increased stop. Okay. No, trend is going up, says Rick. Yes, but you didn't, says James. So James is going to force me to follow my rules. Aren't you, James? Well, good for you. That's exactly right. Okay. So I'm not a fan of, and so you have to you have to kind of also figure out, what would that T1 target would have been, right? Are you talking about a 50% move? Then you move the stop up. You could do that, but guess what? If you move it up and then the stop comes back down and then hits it, then you haven't made any money on any of your position. Right now, you didn't lose any, I guess, unless the stock gapped. So if that is your risk that you can't live without, right? That protection you can't live without, you could do it. The reason we do it on the 2 different targets is because you've already taken profit on part of your shares. Okay, you've already taken part. So if you move the target now, and then it comes back down and takes out the other half at no profit, you still have a profit on the half that you sold or whatever you sold. Okay. And if there's a correction, Zach, you think back and wish maybe you had moved your target up. Okay, so there's something in trading with hindsight. Oh, I wish I would have, I should have, could have, and actually following your rules. Folks, we want to be a rule follower, not a hindsight trader. I should do this, and because then what happens, right? The more you change your rules in the trade, more you do some things differently, then you really don't have rules that you're following. You just have guidelines, and guidelines doesn't allow you to be consistent in there. Okay, so hopefully that makes sense. But again, if you feel that is part of what you want to do for your risk, then do it, practice it, and see if your results are what you want them to be. Okay. Steve, you can't keep track of the success or failure of your rules if you change them. Is that what you're meaning on that one, Steve? If that's what you're meaning, I'm going to agree with you wholeheartedly. And he said yes. So did I kind of like twist your arm into saying yes on that one? So Steve, in conclusion, don't move the stop if you only have one target. I'm a bully, says James. Well, I'm a good bully, right? I'm forcing you to do what's good for you. Now I sound like the government, don't I? You're gonna do what I think's good for you, and you're gonna like it. All right. So, but Steve, going back to the conclusion, don't move the stop if you only have one target. Didn't say that. But in this situation, what we're talking about right here, then yes, don't move the stop if you only have one target. So, Steve, by moving the stop up, is it like having a trailing stop? It can be, but I would be more kind of a manual trailing stop, meaning that you're moving it up manual. All right. Now, let's talk about something. Now, remember, folks, when we're doing these short-term swing type of trades, now again, this is just me, okay? Gary's rules 101, right? These are in the book that I'm not writing. Okay, Gary's book of rules that I'm not writing. I haven't said that in a long time. Holy cow. But just to give you a little insight here. When we're doing a trade, a swing trade, okay, we are looking for what? That reward to risk of a 2-to-1, correct? We're looking for that reward to risk of 2-to-1. So can we implement this 2-to-1 into the trade as it moves up? Because this reward to risk 2-to-1, right? We're first getting into the trade. For every dollar that we're risking, we have the ability, the opportunity to make at least $2. Now, I say yes, we can implement this. Again, this is if we just have the one full target, just one target in mind. We can implement this during the trade. Moving the goalposts, maybe not so much moving the goalposts. And then Zach, what if you move the bracket order up? You're walking down the right path there. Oh, however you'd want to do it, but yes, you're walking down the right path there. Let's just say, not moving your target, Steve. We're not moving our profit target because we're leaving our profit target right where it's at, because that's what we were happy with when we got into the trade. Okay. We got into the trade with that goal in mind. If the stock got to this point, this level, we would be happy with the trade. And that's fine. Remember, pigs get fat, hogs get slaughtered in the market. We want to be careful of getting slaughtered and changing rules mid-trade, which would mean raising our target up in a swing trade. Okay. Now, what was our target? Let me go back to our monitor page. Let's see, we got into this at 154 and our target was where were we? Target was 163. So, I'm roughly, that was about a $9 target, right? About a $9 target on there. So if we had about a $9 target, what would be half of $9? $4.50, correct? Okay, $4.50. We've made half of our target, 50% of our target. Everybody on board with that? I came up with that number. Okay, because it doesn't do me any good to go down the road if I lost all of you at the intersection. Okay. So is that a T1? It could have been, but we're not doing we didn't do a T1 target. Okay. Now the reason I did 50% of what our target was, Larry, can you show us how to enter a target 1 and a 2 and a stop? No, that's a very complex type of an order. And it's yeah, not going to get into that. It's just too many moving parts and things along that line. But you can do something a little bit simpler than that if you wanted to. But so let's go back to our chart here. So even though we did a 50%, so what would 50%? Let me go back here. 50% or $4.50 would be what? So I'm going to come up here. Let's change our gadget to calculator. I'm just going to do round numbers here. 154 plus 450. 158.50. Okay. So the reason I did this is because now this is going to put it on our radar to perhaps maybe do something. Once it gets to about 50% of the target, now we start watching it very close. If it gets up now to, no, not the dollars, let me get rid of that, 70% of our target. Now still, the reason I'm not doing something sooner than this is just because the stock breathes in and out, right? Breathes in and out. And the big breaths, as it goes down, may still not break out of the trend. So we want to be very, very careful here. It's a fine line that we're walking between trying to protect something and then putting something too close that it defeats the purpose of the trade. So 50% will put it on my radar, but I'm really looking at 70% profit. Okay. 70% profit. Now, the reason I'm doing this, let's keep this 2-to-1 reward to risk in mind. If you have a 70% gain, how much more can you potentially make on the trade as far as percentage is concerned? John, isn't 163 the T1? It is the T only. John, we didn't do, it's just my full target. So if you want to call that a T1, you can. But technically, when you hear a T1, that means that they're trying to do multiple targets. Okay, so 30%, right? So 30% left. %, unless trend continues, that doesn't matter if the trend continues or not. Our target was to get out at 163, regardless of what it does. So if we have 30% left that we can make, how much are we risking? If we haven't, if you know, our stop is still down here, right? If we have 30% left to make, how much are we risking? Well, we would risk the 70% plus. It'd actually be more, right? Because we set up a stop, and that stop is down here to get us out at a loss. from our original purchase price. Correct? So we'd actually lose more. We'd lose all the 70% and more now just to try to make the remaining 30%. So how's that lining up for your 2-to-1 reward to risk? that's not good, Ken says. Nope, not well, right? Now the reason I do it at 70%, not 50%. I mean, you can do it if you want. Don't get me wrong. You can do it if you wanted to run this. So when it gets to 70%, I am now trying to get back into my 2-to-1 reward to risk for what I have left. If you want to have something that you can move your stop up on, kind of that trailing stop, this could be a way for you to do it if you want to feel more comfortable. So what would 70% be of $9? So let's go $9. Where's my times? 0.7 would be 630. Okay. So does that though? 154, I believe, was our entry point. So if the price of stock gets to 160, then maybe we start looking at putting a stop in, raising that stop to equal a 2-to-1 reward to risk for what I have left to make on my potential target. Have I lost anybody here? Don't be afraid to say I'm lost, because this is why we're here. Okay, I know this might be a little bit more in depth for some of the beginners. Larry's lost. Okay, Michael's, no problem. So Steve, do you wait to close of day or during the day? That's a good question. So it'll depend on the individual. There are pros and cons for every decision that you make in the market. Okay. And you have to weigh those pros and cons for the decision that you want to make to see which one you meet your risk. So if you wanted to do it, if it hits it during the day and you're able to do it, certainly you can do that. If you wait till the end of the day and then make your changes, you can do that. There's pros and cons for both. Okay. Now, so Jeff says not seeing the difference of a T1 and T2 had been originally set. Okay, Jeff. So here we are. This is what we're going to do. So John, why can't you not have a 2-to-1 reward to risk when price gets up to 50%? Again, you can if you want, but if the stock inhales, takes a deep breath, and it comes down, hits you and takes you out, and then turns and goes back up, now you're out of the trade. Okay, we still want to allow the trade some wiggle room, but if you're fine with that, when it hits a 50%, you can certainly do it. Nothing wrong. I'm not saying that you cannot do it, but again, practice it, test it, and see if the results are better for you or not, and what you'd like to see based off your risk or reward. Now, let's get back to this really quick. Let's kind of clear this up a little bit. The Ken haven't gotten there yet, so bear with me. We'll get there. Ken just asked, what do we raise the stop to? So remember, when we're doing a swing trade, our goal, and even to get to allow us to get into the trade as a 2-to-1 reward to risk. Okay, so when we get into the trade, for every dollar that we are losing, we have the ability to make $2. Now, remember, I said the ability to make $2. This isn't just a number that we say, well, if I'm going to risk $5, I'm going to put my target at $10. Well, you're not putting your target at $10 if the stock doesn't look like you can make that $10, right? So we still need to understand, where those support and resistance levels are, what price patterns you might be using to determine that target, and the chart agrees that the stock could hit that target there for you. Now, what we will do now, we'll let the trade work. When it gets to 50% profit, now again, I'm not doing anything of 50% profit, but if you wanted to modify a rule on there, that T1, T2, you certainly can. But when I get to 50% profit, it starts putting it on my radar now to keep my eyes on it. So then when I get to a 70% profit, okay, meaning the stock has moved up and based off of my total target, which in this situation was about $9, so half of that, was $44.50, but 70% of my profit now, which means that the price of the stock in this trade, I'm just going to round to $1.60. So if the price of the stock hits $1.60, I have 70% of my profit. Am I willing to give up 70% profit to make the remaining 30%? So this is what we have to think of. And this is what I mean by this. So is that part unclear? In the sense that, are we willing to risk 70% in order to make the remaining 30%? Well, not if you're a hog. A hog would mean that I only have 30%, but now I'm changing my mind and want to make 80% above it. Meaning I'm raising my target. That's a hog. Okay. But does it make sense financially to make 30% and risk 70%? So Bill, sell half the stock? You could, but again, we haven't in this trade. We didn't do any T1, T2. It's a full target. All of our shares are going to be will be sold at the same price, whether it's a profit, whether it's a loss, or somewhere in between. So Michael says, I would take that 70% if you wanted to, but that will now change your rules. Unless you've modified your rule saying, nah, I'm going to take 70% every time my trade hits 70%. Well, then guess what? Are you getting a 2-to-1 reward to risk? You're not. And so what happens when you get the risk part, then the strategy doesn't work as well for you in that situation. What does the trend tell you to do? The trend tells me to stay in my trade until it hits my target. Yes, Steve, aren't you risking 70% plus if you don't raise the stop? That's what I said earlier. That's correct. But I'm just putting it into the scenario of the profit that we have. But I said earlier, yeah, with 70% plus, because our original stop was losing money on the overall trade. So we do actually have a bigger percentage than that. But the message is still the same, right? We have a 2.5 risk to reward now at minimum. So what we're going to do now is we still want to try to keep it into the rest of our trade, that 2-to-1 reward to risk. So for those of you who are kind of scratching the head a little bit on, still a little foggy, is that clearing it up what we're talking about here? Okay, so yes, what we're going to be doing, Steve, we will be raising our stop. We're not raising our target, we're raising our stop. And then who was it that I can't remember? I can't scroll up on my chat window when I'm using my drawing tools. Somebody asked, so what do we raise our stop to? Let's figure it out. So Michael, we're following the trend until it hits our target. Until it hits the target we set when we got into the trade. Because again, folks, is this a trend trade? Remember, there's three strategies that we use. We use either a buy and hold strategy, we use a trend strategy, and we use a swing strategy. If we get into a trade with the swing rules, we get out with the swing rules. And then if the stock continues to move up, we reevaluate. Maybe at that point in time, we get into another trade with a different strategy on it. Maybe we start, okay, I feel more comfortable with the trend. Let's do a trend trade. Or maybe I feel more comfortable with a buy and hold now. Let's do a buy and hold. Let's do what took us there to get into the trade. Now, so in this situation, we have 70% of our profit. I'm just gonna put $6 because that's what we said. So we've made $6. We had a $9 target on here. So how much money do we have to make above this $6? $3, right? $3 left to make. So how much of your $6 are you willing to lose to make the remaining $3? Lanny, somewhere I must have missed the trend trade difference from a swing. Yes. A trend trade is kind of a shorter term buy and hold. Swing trade, we're trying to take advantage of what's happening, pushing it at that moment in time, short term. As we back on the slides, remember we talked about the swing trade. We're in it for a couple of days to a few weeks. Trend trade, it could be 3 months or longer. Buy and hold, definitely more than three months. All right, so there we go. I'm seeing everybody saying to my question, the $3 that we have left to make, how much of your $6 are you willing to risk? I see anywhere between $2 to $1.50 to $2. Okay, so if we went right now $1.50 to $2, does that still keep us into our 2-to-1 reward to risk for the remaining amount of the money that we have left to make? And 1.5, yes. Again, if somebody would say, I'm willing to risk $2, that's fine. If you're comfortable with that, okay. So iPad, no. I forgot the question I asked. I'm sorry. So how? Yeah. So $3, $1.50 is that keeps us into our 2-to-1 reward to risk with what we have left to make. Okay, if we have $3 left to make, and you're willing to risk $1.50 of what you have already made, that does. Thank you, Mark. I just had to talk a little bit, and I remember. Appreciate that. It does keep us into that 2-to-1 reward to risk of what we have left to make on the trade. Now, everybody. Okay, so I'm stepping back. Anybody who does not understand this portion of where we're at right now, please don't be bashful. This is important. Anybody now not understanding where we get $3 left on this trade? Now, this is for this trade specific. This isn't a general every trade whenever you have $3 left type of a thing. Okay. But just for this trade specifically, we have $3 left. How much of that $6 that we've made are you willing to risk to make that extra $3 to hit your profit? And so if it's 150, that still gives us that 2-to-1 reward to risk on what we have left. So new stop would have been the same as what T1 would have been? Nope. Well, as far as the target, maybe. It might be close, but it could be different. And it could be different enough that this is why I'm not saying just put it at whatever your T1 was. Okay. So Steve, total trade 2-to-1, $9. Recalculate 2-to-1 of 3 goal to 150. Okay, so now do we raise the stop by $4.50? Well, if the price of the stock was at 160, because remember, we calculated at 70% of our total profit. So does everybody remember how we got $160 target on here, profit? Everybody remember the calculation for that? Okay, so let's run through that again. So remember, when I reach a profit of 70% of my target, right? So $9. So how do we do this? Let's go back. So $9. That was how much money we were making on the trade from where we got in to where it hits our target. $9. So we'll times that by 70% because now this tells us how much money we have made on our trade so far. So out of the $9 that we are potentially making, now 70% means that the trade has made $6.30. I just rounded to $6 just to make it a little bit easier on numbers. Okay. So $6.30. So $6. All I did was took this $6 and added it to our entry price. Okay, so we'll just go plus. I remember our entry price was $154, I believe, and change. So it's $160. So I'll see everybody asking questions. I love that you're asking these questions because it means you're thinking about it. And this is what I hope every time we have a class, I get you thinking, not just regurgitating. Okay. I'm not a mama bird regurgitating my worm for you. I'm hoping that you're now starting to think about some things. That's okay to regurgitate until you get comfortable with it. But love it. So where's our stop? Would that be set at $1.50 above entry from support and limit? Okay. So cool. I love this. So everybody on board with how we got that 70% number based off of this specific trade. So you always take, however you find that 70%, whatever your 100% goal was, whether it was $9, $23, $4, you take that number, times it by 0.7 to give you the dollar, the price of the stock. What the price of the stock, how much the price of the stock will need to move in order for you to have that 70%. Or, easy way, come back to your monitor tab, look at your position, and if you see your, where did it go? Oh, it disappeared on me. Let me go put this on here. It's just kind of a big farfanugan on me here. Profit loss percent. This is one thing I usually have on mine. If for some reason it didn't, it made it so it didn't. So you can come to your PL percent right here if you have that on there. And if you see you'll plus 70%, then you kind of know as well. It's time for you to do something. I'm going to do something here really quick. Let me save this again. Boom. So hopefully that'll stay on my screen now. So this is a whole new trade, Steve. It's not a new trade. We haven't gotten out of our trade. We're still in our trade. Still in our trade. But now what we're trying to do is protect profit by still using our 2-to-1 reward to risk. Now again, I don't do that until it gets to 7, because when the 2-to-1 is less than that and 50% or less, it just you take too big of a risk of getting stopped out, and the stock's still doing what you wanted it to do. Right? So, I mean, good case in point right here. Let me zoom in a little bit closer. Right? If you tried to move something before it was a higher than 50% or 70%, you put a stop in based off of the move on the day before, you would have gotten stopped out yesterday. Okay? You would have gotten stopped out yesterday. That's why I don't like to consider doing anything in that situation based off of that. And see, it's pulling back a little bit now even. So how do we do this? Everybody's asking. Everybody's chomping at the bit here. But again, wanted to make sure everybody at least had a basic understanding of what we're trying to do here before we moved on. If that's the case, everybody at least has a little glimmer of understanding. Doesn't mean you have to understand it completely. Again, this is why these are recorded. You go back and watch them and so on. Let's move forward. So our original stop right here, 149.45. Okay, 149.45. We don't want that there anymore, because well, I wish this was at 160, because I'm going to show you how to do this, but it doesn't quite meet my, the criteria that I'd want to see. Okay. But if it was at 160, that means that we would have $3 left for potential gain, profit. That's a weird P, but you get what I mean there. And if we're sticking with a 2-to-1, that means that we are going to risk 150 loss, because we loss. That means we're have a $6 profit already in this trade. Not has it set up, but again, we're pretending that it hit 160. Okay. That means that we would move our stop up from 149.45 to, what are you folks thinking? Anybody going to throw out a price for me here? I'm going to give you a first number, 1. And I'll give you a second number, 5. Okay, 158.50. If the price of stock was at 160, now again, don't get confused that the price of stock right now is at 158, because we're doing this based off of that it hit 70% or 160. Okay, and it's trading at 160. If it's at 160, we have $3 left to make. We don't want to lose $11 with our original stop. So what are we going to do? In order to make that $3, going from 160 to 163, what's our 2-to-1 reward to risk now based off of that? What we have left to gain would be $1.50 less than 160. So that means we're raising our stop from 149.45 to 158.50. So 160 is the 70% profit level, correct? Does this make sense, folks? This is making more sense. Again, if not, please tell me. And if it's not making sense, again, don't be bashful. Don't be, feeling like the dumb kid in class. But believe me, I felt like that too many times throughout my life. Okay. Slowly sinking in. Okay. Now, so Mark, show the calculation that got you to 158.50, please. Okay. So, well, maybe it'd be easier if I type because it'll make more sense. Okay, profit target per trade was 163. Okay, 163. Okay. 70% profit is basically now 160. Okay, right? We've done that calculation. We all know how we got to that we got that $160, right? We all know that how we got to that $160. So at 160, our profit remaining, don't know how to spell, profit is $3. Okay, to get up to our profit target of 163. Now, 2-to-1 R&R from 160 or $3 profit means that our loss would be 150. Okay, 150. So now what are we doing with these numbers? Well, these numbers are now being based off of the price of 160. Now, again, I know the stock isn't at 160 right now, but I'm showing you the thought process here, folks, remember? So if it's at 160, we have $3 remaining left for our target on our swing trade. So that means that if we're sticking to a 2-to-1 or close to a 2-to-1, based off of how much money we were willing to risk over 70% profit, then that means that we would be risking $1.50 to make the extra $3. And that number will be taken from the current price of the stock. Okay, so that's where we got this number of 158.50 is now where we'll set our stop. Now, Zach says, why not put a trailing stop 150 below the price after it hits 160? Because as the stock continues to go higher, is that 150 still going to be a 2-to-1 reward to risk? What happens if it moves up $1? Now you have $2 left to make and you're risking $1.50. Or moves up $1.50 and you're risking $1.50. I mean, you certainly could. There's nothing wrong with that. But if you're going to try to keep it, though, the reward to risk of 2 to 1 with the remaining amount, then that set dollar amount will actually make that reward to risk smaller and smaller for you. It'll go from a 2 to 1 to a 1.5 to 1 to a 1 to 1 to negative. But you can if you wanted to. So Paul, basically to raise stop, is amending your original trade rule. Well, it would be part of something that you would put in under management, managing the trade. So you will have a rule to get into the trade as far as how much money you're willing to lose. Then under manage the trade rules, you could certainly do something along this line. You don't have to, if it's just causing some people to have headaches and just like, oh my goodness, this is so much work, I don't know if I want to do it. Then you don't need to do it, but you can have a trade management rule that says it's 70% profit. I'm going to readjust to keep it at a 2 to 1 reward to risk for the amount of money that I have left to make. So to kind of think of it as a protecting profit money management rule now. So we're not we're not changing our rule, because you put something in your money management part of your rule that could allow you to do something like this or something else that you want. But again, it has to be specific. It can't be a general rule. So it has to be, every time it hits 70%, every time it hits 50%, every time it hits whatever it might be, that's a rule that you'll do on every single one of those trades for this strategy. James says, at some point, are we over managing the trade? That's a really good question, but I think in this scenario, in this situation, well, what we got going on here, probably not. But if it's too much, if you think there's too much over management now by this point in time, you're getting to this point, then modify the rule and say maybe it's 70%, and then maybe if it gets to 85% or 90% or 95%, that's the only time I'm going to adjust it. If you want to do adjustments, you make it so it fits your risk. Randy, if you're raising your trade stop, then why wouldn't you? Because it's not what we're doing. Because now you've changed the trade completely. You've changed it from a swing trade to something else. I cannot stress this enough, folks. Don't change your rules in the middle of the trade. We're not changing our rules in the middle of a trade here. This is just our trade management. We were happy with making that amount of money to get out. And if we hit that, we should be ecstatic that it hit that profit. Don't be a hog. Hogs get slaughtered. Okay? Be a pig, but don't be a hog. Because if you start changing your rules, okay, again, let me take a step back. If you come up with a set of rules that allows you to modify a swing trade and start raising your profit targets at that point in time, and you've tested it and it works, by all means, go ahead and use it. But you know what? It gives me a headache trying to think about trying to do all of that for a very simple trade. There's the KISS principle. I love the KISS principle. Keeping it simple, students. If you wanted to make it more complex and you're fine with it and it works for you and it makes sense to you, you trade your rules. But it's up to you. Okay? It's up to you. So if you do it that you want to do something like that, test it, practice it. In the intermediate advanced class I taught a few months back, we went over specifically testing rules and how to test them. Hopefully they're still on there. It's been kind of a long ago. They might be cycling them off of it, but again, we need to test rules to make sure they work the way that we anticipate and they really make money for us. All right, so enough of this. Okay, getting a little bit off into the weeds and a little bit too far from what we wanted to do. So how do we change this? So let's just say, now I'm not going to do this right now because the price of the stock is less than what I would have moved my stop to if it was at 160. Okay, but how would we make this change? So go back to our monitor tab here. Okay, now if you wanted to, Texas Instruments, we can go back up. You can either click on here, the little sell button, and we have it right here. Here's our stop is on the top, or limit, or you can come up here to your working orders and do the same thing, right? We have the two orders. We have the limit and we have the stop. Now, I'm just going to raise it up a little bit because again, it hasn't hit the threshold yet for me to make a move on it, but just to show you how it's doing. Now I'm crossing my fingers because I haven't tried this yet since I've been transitioned to Schwab. But you used to be able to come over here and go over to the very right hand corner. It might be a little hard to see, but we have the little, again, the little, well, let me do a yellow, the little yellow, like bullet points there on the very right side of the screen. Okay, so put on there, do a right click and cancel replace order. Cancel replace order right here. Boom. Bring this up. So this only brings up the stop part of our order. So we don't need to mess around with the other part. Our target's still there at 163. Now I'm just going to move this up a little bit, okay? So I'll just say I'm going to move this up to 152, okay? Now remember, if the price of the stock is at 160, then I would have been moving this up to 158.5. All right? All right. Now, Randall, you also brought something else about, and we'll do that just a little bit, but I'm showing you how to do this here. Okay, so 152, it's still a stop, it's still a GTC. Okay, we'll hit the confirm button, replacing our 32 share stop to 152. So we're replacing the original, this is the original order number. Now it's at 152 stop, GTC to close. Okay, looks good, we'll send that off. Canceled one, 149.45. Now let's go back to our monitor page and see what we've got going on here. So here's TXN. Our new stop is at 152. Still have 163, and it's still connected together as an OCO. Okay, does that make sense how we did that? Went to the trade, the part of it that we want to cancel and replace, put that on the little bullet points, left click, cancel, replace order. Boom. Then confirm and send. Do your changes, confirm and send. Now, Lanny is being smart here. So he says, couldn't we just do it from this, the charts tab? Yes, you could. All you needed to do is just put your cursor, if you have it that your orders are showing up, put your cursor on the one that you wanted to change, and you can just click and you can move it. See how you can move it? Okay. Then you can get it close to where you wanted to put it. And you might not get it there exactly, but it doesn't matter. You just click on it, move it somewhere. I'll move it clear up here. Okay. I'll move it clear up here. And now it brings up the confirmation box. Now, if you got it right exactly where you want it to, you just can go ahead and hit send. But if not, then go ahead and edit, put your price in, whatever it's going to be. You know, I'm just going to go 151, confirm and send. And it changed it for you. Okay. So you can just click and drag. Or if you do a right click, cancel, replace order there as well. All right, folks. We did a lot, didn't we? We talked a lot about some stuff here. Does it make sense on now the management part of it? How you can come up with a plan. And again, everybody will be a little bit different. I'm not saying you have to do it the way we showed it here, but you do want to have at least something that once you have a desirable amount of profit in your trade, that now you want to start protecting that and still trying to keep it as a 2-to-1 reward to risk for the amount of money that you have left in the trade to how much you were willing to risk or give up of what you've already made. Okay. Anybody is looking at this going, oh my gosh, that just seems too much work and too confusing? Anybody feel that way? Again, you're not right or wrong if you feel that way. It's you have to trade how you are. Okay. But if you're starting out, it still might be a little bit overwhelming until you get your feet under you and start to understand what you're trying to do basically, and coming up and applying rules that you have based off of your risk and your tolerance, the things that you want to do. There's nothing wrong with keeping it as simple as possible. Folks, I go by the KISS principle all the time. I prefer KISS principle because believe me, folks, I have run the gamut of when I first started trading, not knowing anything, thinking I did, and then understanding and studying and getting, taking tests and getting licenses and things along that line. I knew a whole bunch about things in the markets and then trading, and I knew so much more, and I tried to implement so many more things, and my trading just was not where I thought it would be. Why? Because I was trying to implement too many things. And it's kind of like the circle of trading life, okay, where I've come back now and kept things more simple, but understanding why those simple things are working. Okay. iPad, I've never made a trade and still trying to learn about trading. That's what the paper money account is all about. So that is this is exactly why we highly recommend you practice doing something with the paper money. Do you look back at support levels of raising stops, JP? I do not in this scenario. If you wanted to personally, you can, but again, test it. But for me, on this type of a trade, I'm still trying to maintain as close as I can that 2-to-1 reward to risk once it hits a trigger. And Gary, everything seems overwhelming until you practice it. 100 billion%. Correct. All right, so let's do this. We've talked about all this kind of stuff. Oh, why don't we see if we got something we can put a trade in really quick. Let's see. Zscaler, ZS. Oh, Mark says it just got migrated to Schwab. Well, it's growing pains there, Mark. But if you're missing anything, any information, reach out to them, and they should be able to restore things that you may have had if you didn't get to save them. But cross your fingers for it. All right, so here we go. ZS, folks, you like this stock? Is this meeting criteria as far as trend? If we're going to do a swing type of a trade here, do we have a bullish trend? Yes, we do. I mean, this is a long-term bullish trend, but even if it had, two higher highs and higher lows, it'd still be a bullish trend. Okay. Are we past earnings? Because that's something else we have to. Where's my cursor? Holy moly, my cursor just disappearing on me here. Yeah, we just had it. Actually, the stock gapped up on that earnings announcement, so we don't have to worry about the earnings. Does it trade enough shares for us? Well, right now it's over 2 million shares, so it's a little bit of a bump because we had the big volume spike. But going to say that the normal volume on here is probably close to 1.5 million. So yeah, it trades enough shares. Going to zoom in a little bit closer here. Do we have an entry signal today? Either a bounce up off support or a breakthrough resistance. Do we have a hold? Well, let's see. Stock goes up, starts to pull back. What's the high on this day? We're kind of taking a look on this day right here. The high on this day was 198.99. So that means that the next day we want to have a close above 198.99, or we have a new low day. So we'll put it on this day right here. Okay. Did we get a close above 198.99? No, we did not. But we got a new low on this day. So the high on this day was 198.96. So we get a few penny difference for our entry. So again, what do we wait for? To see if the next day we get a close above 198.96. And we put our cursor on there, and we got a close at 198.91. Did that close above 198.96? No, it did not. So now, what about today? Is that above 198.96? Yeah, it definitely is, isn't it? It's a 203.52 right now. That's not closed yet, Jason. You are 100% correct. It could change drastically in the next 4 hours. But since we're doing this at this point in time, not at the close, unfortunately, we have to make decisions in the class based off of what we're seeing at this point in time. Breakthrough with to hold. Well, it hasn't broken through anything. It broke through back here, and then it pulled back to support. Now we got the bounce. So check, check, check. Uptrend, check. Trades enough shares, check. Past earnings, check. We don't have to worry about that coming up. So now, where are we going to identify a potential target? Do we see any kind of price pattern or something that we could potentially use to identify a target? Or maybe we just use normal support resistance levels. Because this was right here, folks. Was that a resistance and now turned into a support right there, 195-ish? right? So it's bouncing up off that support level. We get the hold. Okay. Definitely has done that. But do we see a pattern? It might be something. We may not have a pattern. And if we don't have a pattern that we can identify and jumps off the screen saying, yes, we have this, we have a flag, we have a triangle or whatever else it might be, then we might now just be having to look at what's the normal move between support and resistance. Well, if I'm looking at normal moves between support and resistance, well, there's one right there. What's that, about 175, 195? That's about a $20 move, isn't it? Okay. Definitely we have a support level here, 140. So if I'm staying with about $20, that looks like it about 160. Maybe we got 120. Now when we start getting a little bit lower, it might tighten a little bit. But I'm thinking about a $20 move on here. So some of you said Fibonacci, tried Fibonacci, look for a target. Okay, you can certainly do that as well. Okay, so Fibonacci, again, we'll click on our drawing tools. It's the percentage. We'll go there. We'll go up off the high. Now, it depends on where you want to draw that down to. You know, support or resistance levels. You can do that. Okay. If I lock that in, maybe about right there, we'll pull this down a little bit. Boy, that takes us to 224. If I had, maybe we'll pop this up a little bit closer. Let me do this. Activate that. Put that right back down there. So 223-ish. So if we if I was doing a $20 move from 195, $20 on top of that would be 215. This is a little bit higher than that. But still, I don't think it's too bad of a target if you wanted to use the fib on that. We comfortable with 223 as a target? Okay. Seeing you saying yep and sure. Okay. So let's figure out, are we going to get a 2-to-1 reward to risk? That's a 2, not a Z. The 0. No, that's a 2. There we go. Does that look more like a 2? 2-to-1 reward to risk. So we have to figure out, first and foremost, our support level is 195. So we'll go 195. And anytime we're doing a short-term swing type of a trade, we're going to use anywhere between 1% to 3%. You come up with a number of what you want to use and be consistent with it. Okay? You be consistent with it. Because if you change it and do some other things, again, it may not work out for you as far as your rules and your back testing, because now your risk might be different every single time you do a trade. So what should we use, folks? So we use 1%, 1.5%, 2%, 3%. What do you think? Can't remember what we used in class last week. Did we? Because sometimes I flip it between 1.5% to 2%. Did we use 2%? Okay. So 195, and we'll times that by 0.98. Okay, that equals 191.10. So that means our stop will set it at 191.10. 2% below 195. Now, if the price of the stock drops to 191, if we want to use just round numbers, I'm fine with that. 191.10, 191, how much money would we lose right now if the price of the stock dropped to 191? Well, it's not $4. That's $4 below support, but what's the price of stock currently trading at? 203.5. So what would that be? $12 roughly? Okay. If we have our target at 223, how much money can we potentially make on this? 203 to 213 or 223? Roughly $20, right? I'm just doing some rounding here. So not quite a 2.5 or a 2 to 1. Not quite a 2 to 1. What would this be? It's about a 1.7, 1.6, says Zach. Okay. A little bit lower than what we want to see of a 2 to 1. 60-40, said Mark. Okay. I personally would like to see it a little higher. Believe me when I said, when I saw this before class started, it was a 2 to 1. Okay, so it shows you, again, the decision, every rule that you have, whether you do it, whoops, that was weird. Every rule that you have, there's pros and cons to it. If I had gotten into it when I first saw this trade, I would have had a 2 to 1 reward to risk. Okay. What about a 2 to 1 reward to risk? Right now, it's a little bit below that, but okay, I'm so fine with it. Let's put this in. Mark says try 11 and 22. Well, I mean, you could play with the numbers if you want, but these are the numbers that we've got. Now, if I went 1% below, it definitely would have made it. 1.5 probably would have made it, but we were using 2%. It's close enough, I think, for right now. It did meet it when I was looking at it earlier before class. So let's do the trade, shall we? I'm going to go ahead and hit the trade. Now, again, remember, we can set this up all at the same time with the OCO order. So I clicked on the ask price, went down to buy custom with OCO bracket. There we go. Now, what we have to do is determine how many shares we can buy, because we cannot buy 100 shares. And if the little gear to do it as a dollar amount worked on the paper money account, we still would not be able to do it with this trade, because we cannot put our sell orders in on a dollar amount when we're trying to buy. It would reject the order for us. So we have to figure out how many shares we can purchase and put the number of shares in here. So how do we make that determination? We take how much money. Again, we're going to use 5%, which is $5,000, and we'll divide it by the current price of the stock, 203. Oops, $5,000. I thought I clicked on my divide. Maybe it didn't. There we go. Divided by 203 equals 24 shares. Now, if you wanted to, it's 24.6. If you wanted to round up to 25, I guess we can round up to 25. But I'm just going to go with the 24 shares right there. So now you see I have my order linked together there. So as soon as I put my 24 in there and I hit enter, come on, baby. And the 24, hit enter. Oh, it's supposed to. There we go. Oh, it wasn't linked. Now it's linked. That's different there. So it's linked. They all say 24 shares. Now, what we need to do is start changing our orders, our sell orders. So first off, the top one is our profit target. So we're changing this to 223. excuse me, 223. And then we'll change these to GTC. And I'm also going to put the day on the buy order there. Okay. Oh, I mean, leave it a day, but I'm going to change the day order to market order. Okay. 223 for our profit target, and 191 for our stop, GTC. So this is our order. So let's see what this says here now. So we're buying 24 shares of ZS at the market to open. And when it fills, we have an order to sell at our target of 223. We have our order to sell at a loss of 191, both OCO, meaning if it hits one, the other one's canceled. Okay. Now I'm going to put a note in here. Placed trade in begin intermediate class on what's today's date? 12/6/23. Swing trade. Profit target is what did we say? 223. Stop, if I can spell stop, is 191. All right, looks good. I'm going to send this off. And we got filled. So now we have our new trade with our working orders, ZS right there. So if you wanted to then go ahead and, monitor it like we did, or come up with some rules that you would feel comfortable to manage the trade once it hits a certain point, so that you're still trying to get close to that 2-to-1 reward to risk. Once you hit a certain profit that's now you're trying to protect, you can certainly go ahead and do that. Okay. So folks, helpful? Is it starting to make a little bit more sense how you can now start to use these different strategies, going from a buy and hold long-term approach to a shorter term swing type of approach to try to take advantage of something that we're seeing happening, but not trying to lock ourselves in longer term. Right? We don't want to be so overweighted in one style of trading, right? We do need to have portion of our account in different types of trades to allow us to try to take advantage of things that are currently going on in the markets. And whether it's shorter term swing trading with stock, or with options, or with anything else, right? We need to have that diversity in our accounts there. Okay. All right. So with that said, we were way over time. Let's wrap this puppy up here. Okay. So I'll go back to my slides here. Steve, how did you search to find ZS as a candidate? However you normally want to search, right? Whether it's in your watch list, or the searches you've already created, whether it's on FinViz, whether you do something on your broker's website, whether you do something on Yahoo Finance, I don't know, right? There's a lot of different ways, wherever your fishing hole is, to help you find a stock. But again, the first place I always start is with my watch lists. Okay. If you run through all of your routine, and then you have time to maybe do some searches, and you can do it at that point in time. But do your technical analysis. Look for your swing trades. Again, what's your setup? Look for your targets and your stops. Again, we're trying to get to that 2-to-1 reward to risk. Place that OCO order. As we've done that, you can place that OCO order after you do the trade, the buy. It doesn't matter. We just did it at the beginning. Last week, I showed you how to do it. Just buy the stock and then go in and place the OCO order afterwards. So if you can go back and review that last week, if you do that. practice the trades, and then come to class next week, and we'll go over some new things in helping you get moving forward and helping you get comfortable with what you are trying to do, and potential rules to make you feel comfortable for your risk. Okay, so let's do this. If you have any issues with the paper money platform, especially after you have migrated over, reach out directly to Thinkorswim at Schwab. There's their email address and the phone number to reach them. If you have other questions about trading, you could continue to come to the daily Q&As. One thing I will point out, just to remind all of you, you've seen this in the emails, you've probably seen it on the website. We will not be having our stock and option Q&As this Friday. We will be out of the office. We will still have the stock workshop. Rob will teach that in the morning, but after that class is done, we will be shutting down and we'll be having our Christmas party. So kind of keep that in mind. Please don't think that Rob won't be teaching this workshop. Yes, he will be teaching the workshop, but we will not have our Q&As on Friday. So, but all the rest of the days, today and tomorrow, we will. But thank you, folks. Appreciate you spending time with me today. I know we talked a lot and maybe ran a bunch of numbers and have a lot of things floating in the brain right now. But again, just keep practicing it, and it will become easier and easier the more you do that. I appreciate all of you, folks. Take care. We'll see you in upcoming classes. Bye-bye.